Good morning and welcome to the Macro Show for Friday, March 1st. I'm Ryan Rich of the Macro team and I'm joined live in the studio by Hedgeye CEO Keith McCullough. And with that, Keith, I'm going to run it right over to you.
Well, for those of you that are new just for this week, and we hope to see you back next week, his name really is the Rooster. Okay, so for those of you that want to get a full throttle on either AI or just data, follow him on, it's Hedgeye AI, right?
Hedgeye AI.
The Rooster.
On the old Twitters.
What were you saying about, like, roosters can't eat chickens?
Well, you were talking about eating chickens. I was just like, just don't eat a rooster. But that's the thing. Most roosters are the ones that get killed because they don't lay eggs. And so it's a hard life as a rooster.
That sounds, no, we're also talking, because I have a tough, my throat's in a tough spot this week. So they gave me this Burt's Bees stuff. So we were also talking about the birds and the bees, right? A little bit. He just got engaged. So to be clear, we're not going to continue with that because we don't want to waste your time. But again, this is just the way that the show goes. We don't have teleprompters or anything like that. Top 3 things this morning in the notebook. Number 1, this is the only screen that I read, by the way. So for those of you that think that I'm terrible at TV, A, I'd agree, and B, I probably need a teleprompter. But we'll go with India, oil, and Qs first. India has been easily one of our best asset allocations, certainly of the modern era. We've had Hedgeye going now for 15 years. I've been doing this for almost 25. But if you look at this chart, a lot of people, obviously, if they're macro unaware, they're one-dimensional spy monkeys. We would never make fun of that. Or people who talk about the Dow and points. No. We're sophisticated global macro, go anywhere investors that really don't care if we buy a unit of spy monkey or a unit of India. Now, of course, this has outperformed even spy monkeys since the period that we bought it. And the only thing that we really care about is when we buy things, when things are in our account. So if you go back to June, instead of trying to arm wrestle everyone on when you should buy U.S. small caps, we bought India small caps. SMIN is, of course, that ticker, or INDA. And it just was a good decision. I mean, we're getting paid for the right reasons. India's GDP, which has been running like 6.5%, printed an 8.4% growth rate. That is so far off the page, and we had the most bullish nowcasts out there. That's so far ahead of our numbers. We weren't even at 7. So 8.4%, India definitely earns it. Again, we're trying to find countries that are in what we call quad 1 or 2. This is the subject matter of the early look note this morning. If you look at slide 35, guys, from the macro deck, which I think, Rooster, did you make that chart of the day?
That is the chart
I think
of
you
the
did.
day. Yes.
So what we have here is, again, the world coming out of a global slowdown and or recession. Some countries reported recessions. China will never report that they had a recession, but of course they had deflation. CPI went negative, and you have big recession reported in Europe, Canada, UK, etc. But what we have from here going forward is an acceleration globally. And don't forget that India never even came close to a slowdown, never mind a recession. So again, they just went from 6.5% GDP to almost 8.5%. So that's a big place that has a lot of demand for things. And one of those things isn't a heli skiing trip at Tahoe this weekend, okay? So point number 2 is oil. Now, there are a lot of human beings, and I highly suggest you open your mind. If you're somebody who's just loaded, living large, but you're still a climate change person, but you're flying heli skiing, I don't know. I mean, I'm not a climate change person. I don't even know anything about it. But I did write about it this morning. So again, in this book, Fossil Futures, which may trigger some people. An institutional client sent me that book. Very good read. I'm not about climate change or anti-climate change. I'm about making money, okay? So if and when the world does what it's already doing in India's case, people that live in abject poverty, that are trying to come out of abject poverty, who have electricity maybe on an annualized basis on what it takes to again, plug in your refrigerator, these people want to eat more, they want to consume more. There's a lot going on here. So demand accelerating now has oil at a 3-month high. Okay, we have China bottoming. Now the economic data for the first time today, the China services PMI number actually went up. That's one of the first numbers to go up, not just up, but above 51, which is new. So again, Chinese consumption, India consumption, Turk consumption. We got long Turkey, TUR. Oil is again breaking out to 3-month highs after being bullish trading trend for quite some time now. So again, this is not disinflation. This is reflation, okay? Reflation. So we're going to be long reflation. Anything that looks like that, again, I'm not going to boil the ocean on climate change. I'm going to be long oil and or related energy products. So again, that's what we think about that. Finally on Qs. Now Qs, it took, and again, You can scream to the screen or whatever. You can scream and go all caps on me on Twitter, but it took until yesterday for the NASDAQ to get back to where it was in November of 2021. That's how long it took. Now, for anyone who buy and holds, you've been bag holding it the whole time. Now, of course, we had you buy it in real-time alerts even as early as last week. So again, we're long queues, but we didn't wear the drawdown. We were short queues for that crash in 2022. Okay, we're not going to apologize for that. We're going to help you understand it, right? We bought India instead. We didn't, last year. We were long queues last year. No, we don't have to be. So again, it's okay. We're long insurance stocks. We're long S&P momentum. We bought that in November. That's been better than Qs. So again, it doesn't matter. The only thing that matters is what's in your account. But yesterday we finally got an all-time closing high, and most importantly, and it's really because we have price, volume, and volatility in our signal as opposed to some simple one-factor model like a moving monkey, like a moving average, right? That's just stupid, right? Or dumb, or stupid, or dumb. Why would you do that? Well, because it's easy. You don't want to do actual fractal math, dude. No, call draw down Josh Brown likes NYCB Bank. He went there. Oh my God. Oh my God. Really? People still actually do that? They listen to those guys on TV? Yeah. Right. It's terrible. It's terrible. Snowflake and that this week, in the same week. It's going to kill people. Yeah, terrible thing. But NASDAQ volatility, which is the most important thing. So again, when you're measuring and mapping things fractally, price, volume, and volatility, of course, it's a three-factor model at the baseline. And when you see the volatility breakdown on an immediate-term trade basis, that's super bullish for the signal itself on the NASDAQ Composite Index going up. VXN, instead of which we walked through yesterday, it's not the VIX, it's VXN. You can look that up yourself. Fell below immediate-term trade, which is 17.99 or thereabouts. And is now right around 17.21. That could easily go to 13 or 14. And at that point, I don't know what the number is going to be, but it's going to be well north of where the NASDAQ closed yesterday. And those are your top three things. Right? Lots going on. Fossil Future, the book begins with a question. I think it's a very good question. Because people think they know everything because they feel things, right? Feelings aren't knowledge. Let's just be clear. What if the experts have gotten everything about the future of energy wrong? Discuss. Send me more books. Tell me why I shouldn't be reading this or why. I'm not going to listen anyway. Right? It's like telling me I should think about sending my kid to Cornell. Never. Never. Ever. Princeton. No. I mean, obviously, they wouldn't let my kids in anyway. But the fact of the matter is that I would say no. I'm wearing Yale hockey today. Good luck to my teams, men and women.
Okay.
Yale hockey playoffs are coming up.
Oh.
That's why I was doing a little pump for Keith Elaine, who coaches the men's team, and Mark Bolding, who's a Canadian beauty, who's doing a great job with the women's team. But what we do when it comes to that's, I love my family. I love playing for Yale hockey. I mean, what a great opportunity. Lowest SAT score at Yale. They let me in, and I had changed my life. It's great. Love that. I'm super humbled by that opportunity. So those are things I love, right? I don't love things that are in my portfolios. Those are just tickers. Those are mechanical relationships that can be quite fleeting. Right? Who got you out of uranium? Why were we long uranium? It doesn't matter. We got out. The signal got us out. And that's it. Good night and good luck. We're long other things. We bought Turkey. I don't like Erdogan. I don't have to like that crazy, No. I like the quads and I like the signal on Turkey. Rooster, do you like turkey?
I like turkey.
Well, you said that roosters can't eat chickens.
I don't eat it on Thanksgiving. We do alternative Thanksgivings.
You do?
Yeah, like bison, or we did kangaroo once.
Really?
Yeah, it's pretty good.
Is it good?
Yeah.
A little dry or no?
No, it's good.
No.
For everybody worried about kangaroo, it is the deer of Australia.
Pretty lean. I would think that's dry.
It's all
you know what? Boomer this morning almost caught a deer. First time. Boomer's my dog. He sits right by my office by the window on a little couch.
Yeah.
And all of a sudden I hear like at 6:30 in the morning and I had the door still open because he had to relieve himself a little earlier. All of a sudden he's flying by me, barking like a bastard, and chasing these deer were in our yard, but they were in the wrong part of the yard. For the first time, he had open runway to go right after him. Ooh. And I was like, wow. this is going to happen, and I'm still writing the early look. I mean, this is, and he barely missed him, and then his electric fence kicked in.
Oh, so you gotta cut that. I could have brought over my smoker, and we could have had smoked meats. Oh, come on, Boomer.
What a morning. What an opportunity, right? You write the early look with your dog sitting there. It's just great. S&P 500 risk range. Thank you for all the kind compliments on the early looks this week. That's my passion, writing about the process, because that's really where I can get into things where, without the teleprompter, I can go anywhere on the show. But in the early look, that's where all of the evolution of our process really occurs. It's at 4:30 to 6:30 in the morning, pre-boomer attacking deer type time for me, where nobody can interrupt my crazy thoughts. That's all there. That's in the early look. All right. S&P 500 risk range 49.76. All right. So what we have here is a big higher low. We have big higher lows in a lot of things right now. Oil, bond yields, Qs, S&P 500, 49.76. That's as low as you can go for now. Think of it like playing limbo. You ever play limbo? I can go low. Remember yesterday I talked about doing the splits potentially at Hedgeye Live. Are you coming? 5150. That would be a new all-time high. So it would not only be a higher high, but would be an all-time high. Okay. That is the most bullish setup that you can find, is when you have a higher high within an all-time high. So again, no matter what the futures are doing or what you're feeling, I saw some guy this morning on Twitter when, I think it was Boomer, when he chased the deer, the futures turned down, and I was like, and he's like, what just happened? I think he was saying it to Sarge, new member of the Hedgeye community. What happened to the futures? Because people are so on tilt, right? And I was like, well, it must have been Boomer. It could have been anything, right? Could be anything, right? So who cares? What you want to do is get the trend right, okay? And higher highs and higher lows, there's nothing more definitively bullish than that. And by the way, for the Russell 2000, that didn't manifest until the last 2 or 3 weeks. And we're not long the Russell 2000, but we're not short the Russell 2000, okay? We have 2 short positions, or I do in my short book, that are U.S. equity in nature. One is regional banks, which should do well. Thank you, Drawdown Josh Brown, for getting a lot of people back into those types of things. And utilities. So now bond yields are bouncing again today, so maybe utilities go down. They should go down today, or at least go up less. Go up less than my longs. Yeah. Not Todd at Yale Hockey, but longs always have to be what? Bigger than the what?
Shorts.
Yeah. Don't make no Irish joke on me. We're not talking that short. We're talking longs are always bigger than your shorts, okay? We currently, and Rooster and I will go back and forth on it, 34 asset allocations. When you can go anywhere in the world, that's easier to do than if you're just a spy monkey, obviously, or one-dimensional. So again, that is what it is. Now, on a price volume volatility basis, when you're hitting all-time highs, would you prefer to see volume going down or going up? Up. Look at this sucker ripped. Look at that thing. Look at that thing. That was a bullish day. Oh, yeah. That was one of the days where I was just getting longer throughout the day. Right? I mean, so that's important in terms of I have gross exposure, obviously, that can be larger or smaller. And again, I'm grossing up on India was a big thing, and we'll get paid on that. It's also payday. Yeah. Oh, yeah. Payday. You know what payday is? Yeah,
it's when the end of the month, you get your 5% on your cash.
Yes. Now, you got to have some of that in the portfolio, right? I got a lot of that. I like that day every day. It's great. What else we got going on for the bongo board yesterday, which is sectors 8 of 11 were up. Healthcare was a buying opportunity yesterday, so we hit the button in PJP. I said this in real-time alerts too. That wasn't part of the all access pass, which I didn't even know until midweek. But here I am like, hey, you must be enjoying this, because we've had a lot of money-making moves in real-time alerts this week. It's not always that way. Yeah, nobody's had more mistakes in real-time alerts in the history of Wall Street other than me, because I'm the only one who publishes every freaking timestamp going back 15 years. Dumb enough to do that too. But that notwithstanding, we're on a pretty good run. And what I said was, when you have you want to have in your portfolio what's called diversification and asymmetry. So you don't want all that happened. That's the guy this morning who's on tilt to SARS, what just happened? Because he really only has one position, SPY futures, right? You want to have diversification and asymmetry. So when if you are a SPY monkey and India is up 1.6%, that's called diversification and asymmetry. One goes up, one goes down. Okay, so that's what you want. I mean, and that's why I do what I do. What else we got going on for you? I wasn't always that way. My first boss made me follow retailers and restaurants because they're the easiest ones to model. And he knew, he went to Princeton, he checked my transcript. He's like, dude, you might be competitive, but I don't know if you're going to be good at this. And it was probably a good bet. They didn't give me like biotech. They gave that to Tom Tobin, by the way. He was the analyst at the firm. So lots of lessons. The firm was called Dawson Sandberger. Ultimately became Dawson Giamalva, Dawson Herman, all sorts of names for John Dawson and the crew. But again, I learned a lot there. What else we got going on for you this morning? So again, buy the damn dip in PJP and PINK. I could have issued a buy signal on both. I put both of them in the same real-time alert, which, by the way, real-time coaching alerts is totally different than when it was 10 years ago, 15 years ago. It has all these coaching notes. It has moves within the move. I put pink in there inside of that one yesterday. Again, I can't hold your hand. I can coach you, though, right? I can try, and nobody else seems to. And it's hard. It's really hard. 1 month. 1 month versus 3 month on vol. A couple things, call-outs from Tier 1 Alpha data. That thing just lost 11% a day, the blue line, and we're going to start to drop. You're going to start to drop some of the high volatility numbers from the sample data. Okay, that means that the probability is starting to rise, and the blue line falls below the red line, and that typically perpetuates some pretty big moves to the upside in Spy Monkey. So you want to be very much aware of that, and you also want to know that we're still above the flip line of 5066. So again, that creates a buy the damn dip market where you'll get rips, but you can sell them and be comfortable that you're going to get a dip to buy them back. Okay, so those are very good when it comes to trading bull markets. You also have a concentration in names that we like yesterday. And so instead of like, but that market is 25% move in 3 stocks. Well, why don't you own those 3 stocks, McFly? I mean, we like all 3 of those stocks. Yeah, everybody else likes NVIDIA too, but you can get paid if you buy them at the low end of the range. You haven't had NVIDIA there for a while, but Microsoft was pretty close earlier in the week. So those 3 stocks were 25% of the return yesterday, and we're short Apple, right? We've had a really good run fundamentally and quantimentally that we're not going to be shy about talking about because we're really good at selling the process, if you couldn't tell. And you can see AMD had a huge day yesterday. For it to have that contribution, because it doesn't have the market cap that the other ones do, it was up 9% of the day, so that made for 5% of the impact on the S&P 500. If you don't know these things every single day, you should. If you don't buy next week, because this isn't free for you, we're going to do better than you over time, because we just know more. We're more aware. If you could be, you would be. And we're going to level you up in terms of getting you there and keeping you there. And you can always get better. Try to get better every day. What else we got going on for you this morning? In Asia overnight, Japan just ripping. Good example of economy slowing. I should be short it, but I'm not because the signal said don't. As a younger man, I wouldn't have done it that way. China, higher highs and big higher lows. Big higher low, 2,900 in the Shanghai Comp Risk range. That should get a highlighter in there. See that's highlighted? Ooh. I have added some highlighters just to make sure that everybody knows what I'm calling out in that notebook. We've obviously had a lot of success with these types of turns when we make the turn from bearish to bullish on oil or China. And by the way, that together is called a similar set in fractal math. They perpetuate each other, okay? What else we got going on for you? Our European longs are going to work again today. Sweden's up like 4.2% in the last month alone, 0.4%. For both that or 0.5%. We're long Dutch stocks, Swedish stocks. Germany just going absolutely vertical as they're trying to come out of a recession. Again, the data hasn't come out of a recession, but the market's not going to wait for you. So again, that German retail sales number, I mean, it was less bad, right? So you look at the 3 recessions that I highlight there in Germany. The 3 green arrows are when the recession was over. This is like when Hedgeye went, this is really dating myself. I might have to have this lozenge. Lose my voice. But it reminds me of 2009. Yeah, you remember that? April. April. Okay. 2009. We launched Hedgeye as a raging bear. Just a man in a room. Actually had Todd Jordan's dog. R.I.P., buddy. His dog's name was Dagny. Dagny and I, because I didn't have Boomer, we just write bear shit to Wall Street every day in 08. Eventually, guys, some bigger type players in the game would be like, do I have to pay for this? You're like, this is actually pretty good. I'm like, yeah, you can pass. And So if you think like bear market rallies were vicious, in 2022, I mean, 2008 was nuts. But we actually went bullish in April of 2009. Now, a lot of what I see today looks like that globally is coming out of a global recession. Again, my stance isn't to compete with a bunch of bozo the clowns on CNBC. It's to get the global macro outlook right, again. So this is real important to think about. There can be some synchronization in terms of, like, at some point, some guy with an accent from UBS is going to be it's a globally synchronized recovery. And at that point, everybody's going to be long China. But, for now, you got to understand that coming out of that point, in Germany in particular, explains, very coherently why the market's trying to discount that the worst of German economic data is over. In rate of change terms, it definitively is. What else we got going on for you this morning? I already hit on oil, but the big higher low there is 76.46. That Burt's Bees stuff works pretty good. Maybe they should, well, actually, nobody pays for, like, Yale's not going to pay me to wear this. Burt's Bees ain't paying me shit. This, all these ETFs that we're getting, all these brokers paid on, they don't pay us anything.
That's the most messed up part.
It's like, bummer.
Well, although we'll probably go short then once the cycle changes.
That's why.
And they probably won't like that.
No.
But we'll get them paid a little bit while we're long.
I remember the Tacrium guys that have the corn ETF used to.
Oh, yeah.
They're like, hey, we should talk, because we're long corn.
Oh.
And now they don't want to talk because we're short it. It goes down almost every day.
Yeah.
It's terrible. No, we don't need sponsorships. We've never really, we don't get paid on advertising, marketing, banking, brokering. But that's get paid on what's in between what in this thick skull and his.
But that's why we can say whatever we want, and that's why it's an independent source. We can just find whatever the truth is. Like, we don't really, nobody's telling us what to write. We can do whatever we want.
Did you, like, you and your millennial friends, does this book trigger you? Or maybe you agree with this?
No, I have a different, there's two different sides, and that's one large side, and then there's another large side on the other side, and the truth's probably somewhere in the middle.
Yeah, he gets pretty close to the middle.
So
he's like, I'm not going to make the case for more fossil fuel use by making some climate change denier argument that fossil fuels or CO2 emissions aren't impacting the climate. I totally acknowledge that. This is the first page of the book.
Oh, there you go.
Right. But I want people to acknowledge that they've only contributed to 1 degree Celsius warming over the last 100 plus years. I mean, I think it's so important for you to be able to take counter or opposing thoughts. And admittedly, it is for somebody who's less intellectual like me, because it doesn't affect you, right? You know how intellectual you have to be Tim Russert? Another Bills fan, him and Todd Jordan. You'll find that these people are super smart, because it takes an intense amount of knowledge to stay one-dimensionally biased and political. That takes a lot, because you're fending off like some actual facts that you just will not confirm, and you definitely want to deny. Our process just doesn't do that, right? So moving along, corn remains a short is the point. Natural gas might be a good short here at the top end of the risk range. We'll see how that plays out today. The dollar, I'm thinking about selling it all. I may or may not. We'll have to see. You'll see that in Portfolio Solutions. Why? One, it's signaling a lower high for the first time. It's still bullish trading trend, so it's still long. It's been good. It's been up for 8 of the last 9 weeks or something like that. But I got other things I can buy, and it's kind of boring. And in Quad 2, the dollar could easily break down. And by the time we hit Quad 2, the Fed might be cutting interest rates. Like 2011, when Bernanke was devaluing the dollar to like a 40-year low, you don't want to be long the dollar there when inflation's going up in dollars. So we'll have to see how these guys screw it up next, but they generally do. And if they are to cut interest rates going into, and I see the Slock from Apollo, thoughtful guy today, is starting to say what I've been saying for quite some time on the macro show, that there may be no rate cuts at all. Could be a rate hike. If you take take the monthly quads, guys, pop them up there. Forget what slide it is, but by the time we hit back-to-back Quad 2s monthly in going into May and June, if they're cutting rates, like during an economic acceleration like that, oil could go to 120. So good, we're along it. What else we got going on for you this morning? Lots going on out there. Bitcoin top end of the range is now 65,228. Now, how's that?
I like it.
That's great. It's just great. It's been a great run, and I hate it. I hate Bitcoin. I shouldn't say hate. I have a dislike for people that could murder my children if nobody was looking, that have laser eyes, that act a certain way. Being long the same thing with those people, I just don't like that. But it's okay. I'm long it.
I like Bitcoin right now.
What's the number one thing that you want to talk about?
Oh, I have a lot.
You got a lot in that notebook.
There's a lot going on in the notebook.
Might do a little overtime today.
Well, I'll first say our Hedgeye joined you long healthcare today. So it's basically the algorithms are on your side.
Can you explain to people what the difference is between my signaling process and Hedgeye AI?
So Hedgeye AI, free. You can subscribe to it.
It's not going to be free for many more days.
No, it's not.
I'm shutting the team down on that.
Yeah. So
Enough.
essentially what it is that it's a computer's point of view on a very, very short term. So like 50% of your market is algorithms every single day. So basically said, what is the short-term view?
Super short term. How many days?
It's like 1 to 3 days. It's and it's just trying to nail those, and it's just using all math, quantitative, computer point of view. It has no human, which that's where you come in, and you can outperform because you can use the computer and the human.
Well, the only human component to it is how you trained it, which is price, volume, volatility, rate of change, the things that we think are of consequence because they backtest as being consequential. Yeah, you can go backtest a 50-day moving monkey. You're going to find that it's like
it doesn't.
You might as well just go flip a coin. Like, why is that even part of their vernacular? Like, I think at a minimum, it's got to be because they hate me, right? Because the minute that they start talking about the trade trend tail levels and they evolve, they'd be crediting us, right? There's a reason why CNBC doesn't, they have like a blackball rule, right? Because they know that we are the antichrist of CNBC, right? So, but everybody who backtests it, they can backtest anything. You can backtest anything. Everything that we backtest as being causal in terms of short-term prices, Rooster put that into, when you're training the machine to look for things throughout the day, that's the point.
Yeah, every ticker has over 100 inputs, and so we looked at everything, and essentially it's trained, like this algorithm's built is just make money.
Yeah.
Which is the Hedgeye process, just make money.
If it doesn't make money, then that's fine.
Hey, get another one.
Yeah, exactly. That's the point. If you go, I don't know why some of these guys that are working at Millennium or Balyasny or whatever don't just ditch their whole research process and just, if you bat the batting average that Hedgeye AI has, you'll be a stud at a hedge fund at a pod shop. Yeah, batting average only has to be about like 60, low 60% maybe.
Probably, yeah.
So, I mean, my batting average is higher than that, but
you can also combine it all. Like combine your risk ranges, combine a little Hedgeye AI, combine your point of view.
So when I'm looking like in the morning, like when I'm like, it's just another thing.
Yeah.
So let's say, like you said, did it signal buy on pink or PJP or XLV?
It just does XLV. So it went long XLV. Pink is in.
Okay, so let's check it down. What would get you to buy something? Buying something and buying something bigger are two different things. So let's use a basic example. Are you going to buy 200 basis points, which for me would be an initial position in an asset allocation, and are you going to buy 300 basis points? My max position is 6. All right. So if I'm going to buy pink or PJP, it's got to be at the low end of the risk range. Okay. B, it's got to be bullish trend, all right? C, which is new to me, again, it's quad compliant, all that, research, et cetera, et cetera. That's the A/B test. Low end of the range, bullish trend, boop, that's it. Don't think about it. Now I have C, which is new because Rooster's new in my life. And it's like if the AI says it as well, then instead of adding it, which to me it's not a minimum position, all right? I've had these two on for a while. My minimum's 2%, right? I never go below it. I had a power user the other day goes, Pete said, he's like, man, for the first time I didn't break my rule and go below my minimum. I'm like, dude, why is it a rule then if you always break it? There's a reason why there's a rule. It's called there's a reason why, like, in your car, like they have brakes. Yeah, like when you hit them, the car stops. Like that's important. Oh, I don't really want to brake at this red light. Okay. Yeah, good luck. I mean, so again, so if I have a 2% minimum position in an equity, which is my min, well, yesterday, if I see this from Rooster, instead of taking it to 3%, maybe I take it to 3.5%. So instead of buying 100 basis points, I add 150, right? Because I have another thing that's augmenting again, it's not so much a conviction in the idea, it's conviction in the opportunity of the timing. Sound familiar? Probably not to market people from the old wall. That's why they suck, right? But very familiar to somebody who coaches the Yale hockey team. Oh, one of my top shooters is open in the slot? Good time to get him the puck. Yeah. So that's how you score. And I think that's pretty straightforward, right?
Yeah. Or you're on a breakaway. I'm a passer, and right across from me, it's a 2v1. Right across from me is the shooter. I'm going to fake the shot, make sure I get it to the shooter because he's a better chance at getting the puck in the net than I do.
There you go. Look at that. Little teammate.
Yeah, exactly.
I like that.
All right, let's get to live economic data. Came out. So there's a lot of trends going on. So South Korea was one of them. One thing I'm noticing in exports versus import data is exports have been going up in Asia.
Yep.
Kind of think of it as China coming online maybe or wherever have you, but also they've been being led by the chips market. So semiconductors and chips. So like China's exports of chips went up 66%. Kind of crazy. But then you have that going on, but then you also have your manufacturing PMIs came out today.
By the way, slide 78 is, this isn't new today, but if you look at South Korean exports year over year, this is now, I guess this would be the 5th straight month? Because we're adding a month. You're saying that number came out or no?
Yeah.
Yeah. So the way that you do the job is that Rooster, when he gets up in the morning, he's like, where is this data point? Oh, it's another black bar right in there.
Yeah.
Now, if it was a red one, he'd be like, shit, that's not good.
Yeah.
Because this is still a thing, right? And this is only 4 months. We would call a trend something's 3 months or more. That's why Hedgeye doesn't call all bottoms. Picking bottoms is a very stinky business, okay? Everybody on CNBC owns every bottom and sells every top. But me? No. We have to wait for the data to, again, so you would have, like most things, you would have shorted or gotten out of the South Korean stock market in 2021. You would have made a pile, like Warren Buffett on the short side, all the way down here.
We did that though, right?
We did that. And now we're what? What's our position in South Korea?
I'm pretty sure we have a long, even in real-time alerts.
Now we're long it, right? So that's how you do macro. It's actually not that complicated when you just summarize it that way. It takes a lot of work to get there. But I guess it's a lot easier to be a spy monkey, right?
But also what we do is we read these reports.
Oh.
We don't just look at the headline.
No, you
Coach.
read the reports.
Well, yeah, I do. If we see the chips market is going, like leading this, right? Oh, what's going on in semiconductors? But also Philippine manufacturing PMI also came out. That was also pretty bullish. One of the key things they did say though is they have a concern surrounding an insufficient supply of raw materials.
Ooh, so that's inflation.
So there's a lot of demand and they're not able to keep up a little bit with their supply. Same thing happened in Vietnam today too. So I guess my question now becomes rare earth metals.
Going from bearish to neutral today. REMX, right?
REMX or lithium too.
And just by the way, because you wouldn't, look at this. On the short side of names I could add, I used to have, this is only earlier this week. REMX was on Monday, was on my short list.
Yeah.
Alongside Clean Energy, by the way, PBD, which is still on the list. Short that. PBD.
There you go.
South Africa, rare. So then what happens is it goes away.
Yeah.
Yeah. So every position has a life, right? A full investing cycle life. The sooner you can come to realize that, the sooner you're going to find the fractal beauty in nature of cycles. The less annoying or just some people just think I'm intolerable, right? Because they think their way and I think my way. It's a completely different language. It's a completely different process. And I get a lot out of making fun of that, right? It's like Mac versus PC back in the day, right? Really? Like, this is very straightforward, okay? The world wanted to be out of commodities as China was slowing into recession. We were short commodities this whole time. Now we've obviously gone long the CRB index itself, which is 19 commodities.
Yeah.
Broke out the bullish trend this week.
Yeah.
It joined oil. The only things that are bearish trend are corn and wheat and hydrogen.
Yeah, okay. HYDR is the ticker, and that's mostly Plug Power is the big holding in that ETF. But
yeah, I did, and we want to be short Plug Power.
Jay Van Sciver.
So, don't tell anyone. Don't tell Anthony Parcio. All right, but I'm not allowed to be short Plug Power. Right? One of the greatest short calls Hedgeye's ever had. Plug is the ticker. Plug yourself with that. Amazing company. Just like a lot of companies on Wall Street, they're in the business of doing what? Selling you stock and bullshit, right? Like roll a truck down the hill and say it's going to do whatever, you change the world. Great chart. I have not personally been able to make a dollar on that thing because I can't short individual stocks that our analysts are negative on or positive on, right? That's our compliance. I created it. No authority told me to. It was my principal authority that said, sounds about right? But I can short ETFs that have big things like that in their exposure, right? Because that's not just Plug Power, yeah. And that's I don't know why those. Well, we know why because it's bullshit, right? Whoever created that hydrogen ETF is either really dumb or doesn't read our research, right? Dumb would be you read the research and you're still long Plug Power. Just unaware would be you didn't read it.
Yeah, exactly.
So there's that.
And do you think Drawdown Josh Brown is looking at manufacturing PMI in Philippines and reading that report?
No. He's going to tell me about how he likes eating. Well, he knows Korea.
Okay.
Korean barbecue.
Okay.
So he's going to be long Shack or something like that.
More positive PMIs. Just that Ireland was very positive. On the negative side was Thailand. Just to put that out. And then also what we had today. Positive. I guess. Where are you on Cannabis? MSOS. It's around trend. I know we have people in it.
Today's a big day for Cannabis. Let's just say that.
Okay.
If it holds the low end of the range, which it didn't quite get to yesterday.
Okay.
Now I took weed out.
Okay.
We sold all the weed. Was the ticker. We had some really good outs. Uranium, weed. Weed was a huge book gain because it was making a lower high like the dollar is today. So I'm like, I don't need to have two of these. So we had MSOS. That was the setup. Okay. So I have one other thing I want to hit on. I want to hit on the Mag 4, just because we've done it throughout the weekend. Because you're with us this week, some of you, and may not be. I just want to make sure you still get the full education. But on something like this, in the asset allocation model, we had this and we had this. So this one signaled a lower high, and this has been one of the more volatile positions that I have had. Volatility is not your friend as a bull. Okay, so at the top end of its range, when it hit it, I think 2 weeks ago, whatever it did, I just took this out. So you get in Portfolio Solutions, it's like it's out. This one I reduced to its minimum. So since it's a commodity, what is my minimum? 1%. It's a 1% position. So today, if it holds the low end of the range above trend, I will make that a 1.5% position because it's a lower quality long because it's not signaling higher all-time highs like the NASDAQ. So dollar for dollar, if I could invest yesterday something, which I did, I added to Qs when they were down on the day, or whatever point in the day they were, you could see it in Portfolio Solutions. I gave money to the NASDAQ and I said, no money for you, Mr. Cannabis. I'll wait another day. That's how the decision-making process goes. It doesn't say, oh, who's that guy and does he like cannabis and blah, blah, blah. Just get that shit out of your head. First of all, they don't know. And secondly, this is just a better way. So that's that example. So if it were to break trend, MSOS will be out, just like uranium was. Okay? So that's a good example of in-game, like how things are decided. Another point I just want to make to finish, as I said I would before I entirely lose my voice. Another one of those. I do have that one. Actually, if you don't mind, this part of the segment is sponsored by Burt's Bees. Let me tell you about the birds and the bees and the flowers and the trees. All right, what do I want to talk about here? I want to talk about the Mag 4. All right. Because we have 4, right? So to review, within the Mag 7, the names that are no longer magnificent unless you're short them are Apple, Tesla for a while now. That might go back to bullish trend. You never know. You never know. And Google. This one is new. All right, so you got those 3. So then when you look at the other 4, and what I really would like to do for these Mag 7 types is just like bag this one and put Netflix in there. Then they could have Mag 5 again. So Netflix is one of the strongest signals in our risk range product or in the momentum tracker product. Momentum tracker product basically only shows you those stocks. Now, but let's not talk about, man, that's Burt's Bees is good. That's a good thing. Thank you very much for that, Burt's Bees. Microsoft. That's got to be blue. Yale Blue Day, right? So Microsoft, what you should have noticed, this was a big one, all right? Equals higher low at 402, and 419 is now the top end of the range. That went straight up. Microsoft, day over day, way better, all right? It fixed itself, like maybe Cannabis will today, all right? Amazon, AMZN, equals higher high within the all-time highs. Still one of the strongest. Stronger than Microsoft. Both Meta and Amazon remain stronger than Microsoft. If Microsoft, if that says 425 at the top end of the range, it'll look just like these two because they're both signaling higher highs and higher all-time highs. Just like SPY, just like Qs. Okay? So that one equals higher high. At 497 I think is the top end of the range for that. But these are the things that you should be noticing when you're studying it deliberately. And then finally, stock some of you may have heard of. Yeah, we'll give that 2 check marks. Trying to get you there. You know, sometimes my voice can be bad, my jokes are definitely bad, but if every day you just had no emotion, no personal attachment or relationship with these tickers, or had to listen to some performing clown on CNBC to comment on anything embedded therein, think of the amount of time that you can save in your life. And the more accurate you'll be in your life, your market life. You'll be able to do stuff like read books. Maybe take that extra, really it was only 6 or 10 minutes, Boomer and I, to watch him try to eat a deer. But you have more time. You have more time in your life. Your life's going to get a lot better. Mine certainly has. It's not an easy game, right? So any time you can find, which David Salem, who's now obviously one of our colleagues here, he called Hedgeye the greatest hack. I took a great amount of, with all the humility in the world, I was like, really? Like, that's humbling, you know, for a guy with his experience, his market wherewithal, his macro wherewithal, his asset allocation wherewithal, for him to say, wow, I finally found something that just creates a hack, like shortcut. These are great shortcuts. And if you know of one that's better, I'd like to know about it. If you know of one, because I'd like to buy it, or employ the person who's got it, or partner with it, like we did with Tier 1 Alpha. We own part of it and we partner with it, and now it's integrated. So just big thank you for me, and on behalf of the Rooster, you know, we had a great week.
Great week.
Great week. It was a great week to have free access.
Exactly.
God willing, maybe there was more than the birds and the bees that had something to do with that.
A lot happened this week, but we do this every week for everybody joining us for free. This is not just this week that we put on a show. We do this every week, and we are very independent, and we love it. And so we'll be back at it just like we do every day on Monday at 9 a.m.